Morning, everyone. Osisko Metals is a Canadian copper story, and don't need to tell you how important copper is in the energy transition. Where do I point the, here we go. A few words about evolving metal demand with respect to what's happening with the energy transition. This was actually published by Glencore 3 years ago, and it's just as true today as it was in the past. If we want to meet 2050 net zero, we're talking about doubling global copper production, doubling global zinc production. And if lithium-ion battery technology does not change, we're looking almost quadrupling nickel and cobalt demand. Cobalt being extremely sensitive since 80% of the world's reserves are in one country, the DRC. So supply is becoming a major issue. And copper, it really is the critical metals. Without copper, nothing else happens. It's used in all forms of renewable energy. And of course, EVs consume 2-3 times more copper per vehicle. On average, you're looking at 8 tons of metals per 100 EV vehicles. And everybody also forgets about grid storage. It's very fine to have wind and solar, but unless you store that energy into the grid, it becomes extremely difficult and inefficient to manage. So grid storage consumes about, believe it or not, 3.5 million tons of copper metal per megawatt of storage. So can't get around copper, and as recently as this morning with the BHP offer on Anglo, the copper deficit, looming copper deficit, is hitting the headlines again. And that is the result of 14 years of poor exploration success globally, despite significant investment in development, poor spot price performance with respect to incentive price required to build new mines. This was published by S&P Global a couple of years ago. It's still true today. You're looking at $4.50 copper, U.S. copper right now, if you hope to bring in new projects at a very conservative and at this point unrealistic after-tax internal rate of return of 15. If you want to finance a major project today, actually, they find the banks want 20, not 15, which makes it even more difficult to put new projects into production. Result is that new production has been flat and is going down. Even with the recent surge of copper, actually it hit 460 this morning. I believe it's going to be sustained this time. It's not going to be a flash in the pan that has been in the last couple of years. The deficit is real and it's coming. And this was published before Cobre Panama shut down. So right now, I think most analysts see a long-term deficit starting by year end. And so we should see significant impact on spot price of copper. So we believe we're entering a bull market, and that is the reason in the last 2 years we've been working on acquiring the idle Gaspé copper project from Glencore. It's a past producer, iconic mine really, produced over 45 years in eastern Canada. For those of you who are not familiar with it, near the town of Murdochville. It was named after J.Y. Murdoch, who was the president of Noranda Mines way back in the 50s. Nothing like naming a town after yourself. And Gaspé was a very significant producer. This is this mine site, circa 1990. I actually worked there for 5 years in the early 90s. Smelter, 10,000 ton a day mill, and administrative and ancillary buildings. Mostly underground operation. It was actually a huge room and pillar operation. It was actually the biggest underground mine in eastern Canada, if not all of Canada. The pillars were 35 meters high, really a monster operation, with a small open pit to the north, and with the mining town of Murdochville in its heyday with about 4,500 population of 4,500. All this was built by Noranda, smelter town and mine, 52 to 55, 3 years to build a complex and the town they went with it. Today, you'd be looking at 10, 12 years of permitting before you could even start doing such a thing. The site's been restored at a closure cost of about $150 million paid by Glencore. So the smelter's gone, the mill is gone. which is good news because that's why we were able to acquire the asset and expand the resource, because the mill and smelter complex were beside the old Copper Mountain pit. Expansion was impossible. So as it stands, restoration is a good job. The water is relatively clean. It respects both Fish and Oceans Canada and Quebec environmental standards for rejecting into the environment. However, there's a nearby salmon river, and right now we're looking at alternatives to empty the water, not to impact the salmon river, because standards for salmon rivers across Canada are far more severe than Fish and Oceans Canada standards. So the actual site right now, Murdochville is located here. Power substation still in place, highway down to Deepwater Port, an hour's drive away from Murdochville. Nice key center in Murdochville. The town has survived since the closure of the mine and the smelter in 2003 from essentially a call center and seasonal outdoor activities. Our pit expansion project here is outlined in green. We spent the last 2 years drilling off the resource. Right now we're sitting with an inferred resource of 456 million tons of 0.31. Next Tuesday, or Monday or Tuesday, we're announcing the new resource, which will be almost all indicated with better grade and significant increase in tonnage. So for those of you who like a great copper story, keep an eye out for that. And that's a result of about 28,000 meters of drilling in the last 2 years to convert the whole thing to indicated. The deal with Glencore is very simple. It was straight acquisition through the issuance of a convertible debenture, exercisable at 40 cents per share. Milestone payment of $20 million upon commercial production. The big commitment was to spend $55 million in the next 4 or 5 years to bring the project to FID. Glencore keeps a 1% royalty on Copper Mountain, and basically what they wanted was 100% of the offtake. So before closing the deal last July, we had spent 6 months negotiating the life of mine offtake agreement, which I have to say was very reasonable and respected commercial terms. So past production was mostly from underground skarn operations at Needle Mountain, located here. This is north-south cross-section. Right now we're looking, as I said, to expand the pit. Our current pit model will reach a depth of approximately 600 meters. The current pit, which is flooded, reached a depth of about 160 meters. So the pit is water-filled. As I mentioned, we will attack the dewatering problem starting this summer with environmental studies, a lot of water sampling. Our drill program was focused all around the pit and at Copper Mountain. And as a result of this, we've been able to convert the whole resource to indicated, which again will be mentioned next week. The working model is 0.12 is the theoretical cutoff at $4 copper, which is what we're basing our long-term copper production. And the 0.16 was the resource cutoff grade to give ourselves better margin. And so that gave us an in situ resource of about 3.1 billion pounds. So on a global scale, it's a Tier 2 asset. Tier 1 copper assets are north of 10 billion pounds normally. But it's in the Tier 1 jurisdiction. I know I can get this permitted, whereas obviously, as you all know, permitting issues are becoming a huge risk across the planet. Nice thing about the deposit, it's a fairly standard porphyry system with a higher grade core with significant molybdenum, and that is what we converted along with the rest of the resource to indicated. So there's this the contour of the 600-meter pit, deep pit, and this is the current pit bottom. So this summer we've got a 10,000-meter program designed to improve grade in the core of the deposit. I believe we can get the grade, average grade, certainly north of 0.5. And adding moly and silver credits, this is going to be the basis for a 3-year starter pit, which has a huge impact on after-tax IRR. Geologically, fairly standard copper moly stockwork, both in porphyry and surrounding host rocks. The only difference really between Gaspé copper and your standard porphyry copper system is that everything is hosted by calcareous sediments, no volcanics. That's proven to be very advantageous because no acid drainage from the tailings nor the waste piles. There's enough calcite in the system to neutralize all acid production. Recent metallurgical results gave us very good results, 92, 94% copper recovery, giving us a 24, 28% copper concentrate. 65% of recovery on the moly, so now we know that we'll actually be able to produce moly and silver byproducts. This summer we're going to be testing the Needle Mountain potential. We've outlined potential for 50 million tons from historical drilling in the 60s, and there was a small pit at Needle Mountain. They extracted about 14 million tons of 0.7. We're hoping to define 30 to 50 million tons of higher grade, which would feed, again, starter pit along with the core zone of Copper Mountain. In an ideal world, if we define 100 million tons north of 0.5, that'll have a huge impact, as I mentioned, IRR. So community relations have gone well. Backwards, not working. There it is. So continuous presentations with the local community of Murdochville. We have strong support right now, and we're almost done closing an exploration agreement with the local First Nations, with our Mi'kmaq. So timeline to FID is 5 years right now, at the end of 28. It's very realistic. With the positive feasibility and permits, we'd be looking at a 2-year mine build for a nominal 60,000 ton a day operation, and with potential production in 2031. We have a secondary project, Pine Point, joint ventured in the Northwest Territories with Appian Capital. If you want details, go to our website. We're free carried on this one to FID. Appian's investing $100 million. It's a zinc-lead story again. Past production, old Cominco operation was shut down in '88. We've got about 50 million tons mix of measured, indicated, and inferred on the site. Also, a new MRE coming out on that project in the next 2 weeks. And we're on budget, slightly behind time, a couple of months behind time on a 4-year timeline to FID on that project. Again, with a joint venture with Appian. And the nice thing about Pine Point, it would produce an exceptionally clean zinc concentrate, which has become quite rare on the market right now. So 24 objectives, launching exploration program, Pine Point, 6,000 meters, which was done this winter, releasing updated MREs on both projects in Q2, and again next week for Gaspé Copper. We've launched feasibility at Pine Point. We're launching environmental baseline studies at Gaspé Copper this year, and we'll continue definition drilling programs and exploration at Needle Mountain for a total of 8,000, minimum 8,000 meters at Gaspé Copper. And we're continuing trade-off studies at Gaspé Copper with the intent of producing a pre-EA in January 2025. So in short, Osisko Metals' exceptional opportunity to invest in the Canadian copper and zinc stories, and mostly copper. It's going to end up being on a NPV basis a much bigger asset than Pine Point. And quite frankly, we believe it's the best copper development story right now in Eastern North America. Thank you.
Robert, you have time for a question if there are any. Oh, looks like you're set free.
All right, thank you.
Nice to see you.